A major exchange suffers the largest hack on record in a week where crypto prices slide. We cover all this right now in the Collective Shift weekly recap, actionable insights, and a breakdown into the crypto market, all in under 30 minutes. Simon, the sliding of prices just continue, hey, particularly for altcoins.
Yeah, it's still definitely been some painful weeks, coming up to really a month of just pain in the crypto markets. And everyone talks about, in bull markets, crypto can drop 30, 50%. It's normal for the cycle. It's great to say it. It's another thing to actually, experience and go through it. So emotions are high as everyone watches their portfolios, kind of getting decimated at the moment.
Yeah, for sure. I think Bitcoin just hanging in the early 90,000. So that has fallen by, 5% at the time recording over the past day. And it's down 4% over the past 7 days. And yeah, as expected, all of the other, majors are down even more steeper in the negative than Bitcoin. Solana in particular, they're down 20% the past 7 days. Nearly all of that decline has come, in the past 24 hours in percentage terms there. So yeah, Solana all the way back to $140, which is now fully retraced. It's it's pre-Trump pump, as I've got up on my screen here, just fully round tripped. As we know, Solana's been the market darling in many ways. It has been of this bull market. So yeah, symbolic that it is now fully retraced, and it's now even lower than the day of the election. And yeah, all other sort of cryptocurrencies are really struggling on a day like today. And I think that's reflected in many ways with Bitcoin dominance. So the percentage of Bitcoin's value compared to the overall crypto market, that is now at 62%, which is certainly the highest for this cycle, and it is actually now at a 4-year high. So I believe it was March 2021 was the last time it was at these highs. So very notable there that people are just either looking to get out of crypto entirely for temporarily, or they're also selling some alt into Bitcoin. This is sort of what this is signaling here. Any other insights there, Simon, on the state of the market?
Well, I think the thing to, just be concerned about there is that obviously Bitcoin dominance is going up while Bitcoin price is going down. So if you're feeling painful in your holdings, it's because everything else is going down worse than Bitcoin. Hence the dominance going up. So it's a really painful time to be in the market. And just going back, to what you said about Sol having round trip with Trump pump, I guess that's the volatility and the quickness of crypto in general, in the fact that, that was November last year. So what's that, 4 months ago? Not that really long, 3 months ago. That's how fast crypto can move on us and how volatile it is. So I guess just remember that it can come down as fast as it goes up is a very important thing to remember. So I guess later on in the cycle, when you're feeling that, euphoria and greed and excitement, this is a good time to remember the pain of what can happen when prices go down.
Yeah, definitely. And I think prices are going down in and of itself is very painful for investors. I think, arguably what's also sort of contributing to the pain is that other sort of assets out there are performing very well. Gold in particular has really just picked up where it left off in 2024. It started this year just climbing higher. At the time of recording, gold is more or less at all-time highs. And we're also have seen, as we commented last week, we've seen a strong just rebound in stocks in general, particularly in the US stock market ever since the DeepSeek sort of drama. They've come back and bounced very strongly. So I guess that is adding to the pain there in the, crypto market. No fun seeing everyone else having a lot of fun in other asset classes while crypto continues to bleed. So really, I think people are asking, why is this happening? If all these other assets are doing so well, how come crypto just is really struggling? On that side of things, I tend to put quite a lot of weight into just the changing macro environment, and more so just the expectations in the market. I think going back 3 months ago or so, I think a lot of investors were getting optimistic about Trump coming in, and also that the Federal Reserve was going to be cutting rates quite aggressively. Like in 2025, there was, about 4, 5, even 6 in some forecasts, 6 25 basis point rate cuts expected for 2025. Now it's looking like we might just maybe get one, possibly two. It's looking like at this stage. And then also I think optimism was surrounding Trump's inauguration and some immediate action with respect to seeing results about how the US was going to be pro-crypto, and in particular, people getting optimistic about there being a strategic Bitcoin reserve being announced, from Trump's first week in office. So I think that's as simple as that, really, in terms of the market baking in a lot of really strong expectations. His inauguration has happened. Federal Reserve has adjusted and softened their sort of forecast for this year, and therefore crypto being a very risky asset class, which is quite responsive to things such as global liquidity and things like that, has really been beaten down more so than other assets out there. So that's just some commentary on why this bleeding is continuing for crypto. But as always, there's always a bunch of reasons. It's never really just one thing to point out for sure.
It's a strong thing to point out, though, because as you just said, like the stocks and gold are going really strongly, and the macro environment's the people cheer when crypto is going up and traditional markets going down. It's like, oh, we're a better asset class, but then we just like to pretend it doesn't happen when it goes the other way around. And I think the main kind of reason behind that is that the crypto market was expecting a strategic Bitcoin reserve, and that was getting priced in so much. And obviously, Donald Trump's kind of kicked that can down the road. It's not a no, but it's kind of like we wait and see kind of thing. I think that we priced that in a lot with that Trump pump, and now the market's going, well, we've actually got to consolidate here till July-ish when this might come out, and then everyone's, kind of calm down from their euphoria moment. We go, well, hang on, even if that gets something of saying they're going to do something in July, then we got to go through all the law and stuff and getting through all the House and Senate and all these kind of things, and that takes time. So strategic Bitcoin reserve could be a year away, could be more. And I think we got overexcited, and I think the price is now somewhat reflecting that. And that's why Bitcoin and crypto in general has gone down, whereas traditional stock markets are kind of going up. They don't have that negative effect going on. They've still got Trump's positive, economic, preferences and kind of that, whereas crypto doesn't have that big catalyst anymore. Hence prices have really suffered.
Yeah, well said. And just a final bit of news here, the market wrap up in particular. It is looking like this is just a few hours ago, Trump more or less confirming that, hey, that 30-day delay that he agreed with Canada as well as with Mexico for their tariffs, it looks like that 30-day delay is all there is, and that these are becoming effective. So we'll see if those countries again come to the table. We've got 10 days or so before that March 4th deadline of when those tariffs become active. So again, why is this spooking the markets? Well, it's having less of a shock, I think, as time goes on, as the market's getting used to Trump really following through with his aggressive sort of trade policy. But really, it's ultimately just not great for risk assets in particular. And yeah, we'll see what countries come to the table in the coming months. I know Trump has ordered some more reports and whatnot, similar to what he's done with crypto. Trump has also ordered, his cabinet essentially to go and come back to him with reports on the trade deals between basically each individual country. So, you're going to be hearing a lot more about tariffs, I guess is the long and short of it. And that will be in the news constantly over the coming weeks. So overall, I see the market still operating with quite a bit of uncertainty, for the foreseeable future. But I guess the big reason why Bitcoin hasn't plummeted even more, Simon, is this next story here with some big buying from a familiar face.
Yeah, Michael Saylor's MicroStrategy, or now is known as Strategy, they bought another $2 billion worth of Bitcoin. And I feel like MicroStrategy and Strategy, the name change, is going to be as long to get a hold as Twitter and X is.
Honestly,
it's just never going to change. We're going to call it MicroStrategy forever. It's too hard. But I guess the thing is that maybe MicroStrategy is the only buyers of Bitcoin at the moment right now, because I'm pretty sure I've been seeing that ETF flows are actually outflows at the moment. So everyone's a seller of Bitcoin. So Michael Saylor has been our buyer of last resort kind of thing at the moment for Bitcoin. but it couldn't hold up the price. So even $2 billion worth of Bitcoin couldn't hold up the price. And I think we still saw a sell-off after this. So we're in a stage where positive news doesn't help the market either. But, maybe if you're shareholders in MicroStrategy, you're still quite happy to see them continue to aggressively carry out their, intentions of buying Bitcoin. But the market hasn't responded positive to it. I think in general, this is just noise in the grand scheme of things now. As we said earlier, we're just waiting for Trump and the Strategic Bitcoin Reserve.
Yeah, for sure. Especially, it has been telegraphed in many ways with their plan to, raise aggressively and I guess follow through with those capital raises in terms of buying Bitcoin. So in many respects, it is priced in, but I still do have to pinch myself sometimes knowing that a company out there holds 500,000 and soon it will be more than that. I think it certainly has been holding up the price of Bitcoin. Absolutely, when you look at the lack of demand elsewhere. Otherwise, the past 7 days, we also had a particularly large hack. Potentially, they're calling it the largest ever, theft value in terms of valuation. The biggest sort of, I guess, heist going back to history. I'm sure inflation adjusted might change that, but certainly we got a $1.4 billion hack, which is again just sort of blows your mind that it can be that large. But one of the largest exchanges in the world is Bybit, and over the weekend, I think it was Saturday morning, I guess Australian time, really shocked the space. But surprisingly, I guess the market held up relatively well, and the team and the executive team at Bybit managed to sort of handle the crisis, to the best of their ability, despite some of their employees, I suppose, being the victims here, or being the reason why this hack actually happened. So the long and short of it really is likely North Korean sort of a hacking group called Lazarus Group, which if you've been in crypto a while now, you'd be familiar with that name. They essentially coerced and manipulated some key employees at Bybit. It was a social engineering attack, as they called it, and they sort of manipulated them through various techniques to sort of agree to sign a transaction all at the same time. So it was a multi-sig wallet, and they all sort of approved this transaction or request at the same time, and resulted in $1.4 billion worth of ETH in particular. It was basically all ETH that was hacked. So quite a big announcement. And in terms of the market outlook or how investors should really feel about that, you'd think if you said the biggest hack in history were to happen, you'd think crypto would sell off quite a bit, but it hasn't. So in terms of investors out there, the big takeaway for me really is just it was another reminder of really just the importance of self-custody, or in other words, the importance of having your cryptocurrency in your own control, such as in a hardware wallet. It was also just another, I guess, event that raised awareness of the risks of having cryptocurrency on exchanges. In this case, it was lucky that Bybit is a very successful exchange, a very profitable exchange. They were able to get a loan quite quickly, a bridge loan, and they were able to facilitate all the withdrawals. It looks like they'll be continuing to be operational and solvent. So, people who had money on there, maybe more than they were comfortable with, they all actually got off, and it wasn't like an FTX disaster. But again, just another reminder out there to consider where you are keeping your cryptocurrency, because you're just one hack away from exchanges or wherever else you got your money or crypto on, and it can really end in a disaster. So any other insights there on that extremely large hack there, Simon?
I'm just amazed that Bybit is able to absorb a $1.4 billion loss. Like, this is just how profitable these exchanges are in general, and that I'm sure it's got to hurt their P&L, but to just come out very confidently, very quickly saying, we can cover this is huge. It's great for, I guess, users of Bybit, thank God, because that could have been a lot worse if we had the whole exchange going down. But I'm amazed that the company can survive such a large hack and cover the costs it's incredible amount of money to have lost. And somehow they've made everyone whole. That's great news for everyone. It's great that they could do that. I don't know how they managed.
Yeah, for sure. I think the fact that they're specializing in derivatives, I guess, also maybe is a signal to everyone out there of just, perpetuals and derivatives, the losses that you can accumulate on there can happen in an instant. And the vast majority of traders, particularly on the derivatives side of things, definitely lose money over time. And these entities like Bybit, clearly earn a significant amount in liquidation fees and other sorts of fees there. So just a final thing here before we move on is, this DP, like this North Korean sort of entity, Lazarus Group, has really significantly accumulated sort of through different hacks over the years. They're estimated to be now $5.5 billion worth of cryptocurrency that they've stolen. Obviously, getting rid of that is another thing, particularly in this day and age. Actually selling that, is a lot more difficult than it previously was. But I guess to be on the side of, when you're trying to understand how come regulators often have a problem with crypto, particularly in the US, this is a major reason in terms of, countries that are, circumventing sanctions and whatnot, such as North Korea, that economies like the US are trying to squeeze out and choke out from, really operating as a sufficient economy. Governments like the US get very frustrated when they see countries like North Korea managing to earn revenue through things like this. So when you're talking about anti-money laundering and KYC that these governments are always pushing, this is sort of like a big reason why. The longer this goes on, the more fuel that anti-crypto politicians sort of have to, push for crypto to be more heavily regulated. But anyway, that's sort of going a bit off topic there, and back to sort of, more dry regulation stuff. I'll keep this one rather quick, but it was more, reinforcement that things are changing in the US. So what I'm talking about here is all last week, we actually had 3 major news events, all sort of with the same sort of outcome in a sense. That's the SEC, so the securities regulator over there in the US. They basically announced that they're shutting up they're closing their investigations into 3 rather large entities. So Coinbase being the most sort of sensitive there or significant, and then Robinhood as well, and OpenSea to a lesser extent. So why does this matter? It's just more confirmation that the US is genuinely sort of going from a very anti-crypto economy and country towards a more, at least swinging towards a more pro-crypto country. And the fact that Gary Gensler is now resigned as of 3 or 4 weeks ago, and we're already seeing action in terms of, Coinbase here sort of celebrating and being quite happy now that the SEC is agreeing to end their sort of enforcement case. So that's all very promising for particularly sort of the medium to long term sort of future of crypto, in my opinion. We sort of, for better or worse, we need the US to be at the very least a neutral sort of country for crypto, in the best case, like a pro crypto country, to get the sort of valuation of the whole market cap magnitudes higher. I think that has to be the case. So good to see that we're no longer in this very hostile environment, all indications.
Well, it's the old thing everyone's talking about, choke point 2.0 going on. And so this is that unwinding further and further, as we can see here, is with the SEC, the new leaders of the SEC realizing they'd overreached in many ways. And so they are just winding that back. I mean, the SEC still has a very good job to do and, an important role to play. And hopefully, going forward, it can be a little bit more, what would I say? I'd probably call it, targeted rather than this blanket approach of just lawsuiting everybody.
Yeah, well said there. And Also, again, just wrapping up, just some legal stuff. We had OKX actually paying a $500 million fine that just came in a few hours ago, just settling with the Department of Justice there. So yeah, quite a bit of news happening in the legal side of things in the US. But in terms of altcoin updates, as we said, it's been hemorrhaging prices in many respects in the altcoin market. One that's been quite beaten up, unfortunately for people holding it, is Radium. So again, we've said Solana is one of the darlings of this cycle, and Radium has been one of the most loved sort of projects. However, they have fallen quite. I know they fell about 25% within a couple of hours of the announcement of Pump.Fun releasing their own automated market maker, so their own AMM, which really just means that Pump Fund is sort of cutting ties with their really high profile partnership with Radium, which was a very large and significant reason why Radium was getting such strong price momentum in the market over the past 12 months. Any coins or tokens that graduated from Pump Fund automatically got bonded to a liquidity pool on Radium, and with the Ray token having a sort of a buyback and burn model, the more activity that went to Radium, just the better it was for the price of Ray, all else being equal. But yeah, now Pump.Fun sort of, I guess, cutting ties with one of their longest serving partners there. So I think this is sort of, unfortunate for Ray holders. And I think just for any new or any older crypto investors, it's another good reminder of just the importance of doing, as deep a fundamental sort of research as you can, time permitting, just looking at the defensibility of certain projects. So in this case, Radium was so heavily reliant on Pump.Fun, in hindsight's 2020. And I know there were probably people out there who identified that as quite a big risk for Radium, in terms of their exposure and what happens if Pump.Fun launches their own AMM, which has now happened. And I guess you've seen the price reaction to Radium there. So just a good case study or example there for anyone going through their research.
Yeah, and Radium was, from a fundamentals perspective, one of the great DeFi plays out there at the moment. It was making huge amounts of money. The fees it was generating was enormous. And
Absolutely.
When it's doing a buyback scheme, it's helping push the price of Radium up. I mean, yes, it's right for Radium, I guess, to have a correction about this news because a large amount of its revenue was secured through Pump.Fun. I mean, in general, it is an open market and they're free to do whatever they want. I don't know if this is a good move by Pump.Fun in general. I mean, are they there for, rather than embracing all of the crypto community and all of the Solana community, they're going, okay, we're going after your bags as well now, kind of thing. And I don't know if that's a great thing for Pump.Fun to be doing. They could have really focused more on what they were providing as a product rather than, I guess, trying to vampire attack one of their biggest partners. So I don't know if it's a good thing for Pump.Fun. I don't know if it's a good thing for Solana. It's obviously not a good thing for Radium.
Certainly in this environment when the Solana ecosystem's sort of reeling, to see that move coming now, I think, is particularly sort of speaks to what you just mentioned there, Simon. Any other altcoin news, or otherwise we'll move on?
Let's move on, mate.
Yeah. Nvidia, I think, speaking of the AI tokens, if you are holding some of them, I think Nvidia's Q4 earnings, just marking that will be after the market close on Wednesday, US time. So like what we've seen the past few quarters, Nvidia's earnings, for better or worse, have a significant impact on the short-term price action of all crypto AI tokens. So that's just more of a heads up there. The whole market will be looking onto that, given Nvidia now is one of the largest companies by valuation in the US there. So rapid fire here. In terms of just underrated, I just want to give a shout out to ETH Denver, one of the largest, I guess, annual Ethereum conferences that is kicking off this week. Again, while altcoins are bleeding, it's a good time, I think, to get in and do some fundamental research. So I'm expecting there to be quite a few project updates and announcements this week at ETH Denver. And I think particularly underrated is just people's knowledge or awareness of the fact that ETH Denver, they actually upload all of their sort of webinars, or all of their sort of presentations and keynotes from all their speakers goes up on the ETH Denver YouTube channel. So you can just Google that and it should come up. So that can be a really great way to, just get an understanding of upcoming trends and what's going, what the status of certain projects are. Simon, hand over to you.
Yeah, so my underrated thing for this week is basically just how much the entire market is dependent upon the BTC price right now. I feel like there's been a lot of pain in so many things, meme coins, AI narrative, layer ones like Solana down 50%. And that's kind of, I guess, status quo. I guess we know that happens in bull markets, but we also know Bitcoin can also do that. But Bitcoin's only down 15% so far from its high around the 110 mark. But we know Bitcoin can also do 30%, 50% crashes. And so I'm watching that right now. I think people should be watching that, because how much lower can your alts go if Bitcoin does actually find itself going into a 30% decline? I think people could possibly need to be prepared for more pain in those alts, because if Bitcoin is going to have that kind of big correction, then something that's already down 50%, something that's already down 80%, well, guess what? They can go down to 70%. They can go down to 90%, I feel, in this current market environment. So everyone should be watching Bitcoin, I feel, at the moment, because I think it's definitely still going to be leading this market right now when we're in so much uncertainty.
Yeah, it's a good shout out. There's a lot of calls for, should I buy here for Solana, or should I buy here for Sui or anything else? And yeah, it's hard to give an answer or an opinion when it's sort of viewing that in isolation. I think, to your point, everyone needs to be looking at Bitcoin at the moment, because a very underrated part, and something I'm just not seeing now is people talking about a situation like you just described, where Bitcoin does go lower into the 80,000s, hey, maybe even lower, who knows, in this environment. But we'll be there the whole way, riding the bumps for sure. So thanks for joining us this week. And if you are looking for more insights, do check out our weekly Shift newsletter, providing free weekly market insights every Friday straight to your inbox. So you can subscribe to the newsletter at collectiveshift.io/newsletter. That's collectiveshift.io/newsletter.